Well, dear learners, I welcome you all in this session on Consignment Accounts Part 5th. So, well, dear learners, we have discussed about the valuation of the unsold stock, the calculation of the normal and abnormal loss, and its impact on the valuation of unsold stock. You know that the goods sent on consignment are recorded in the consignment accounts at cost price. Sometimes the consignor does not want to reveal the cost of goods to the consignee and therefore invoice the goods at a price which is higher than the cost price. So, now when such a situation is given that the consignor does not want to reveal the actual cost of the goods consigned to the consignee, in such a case the goods dispatched by the consignor to the consignee is consigned at a price which is higher than the cost price. Such price is known as invoice price, and the difference between the invoice price and cost price is called loading. In such a situation, the entry for goods sent on consignment is also recorded at the invoice price, which would need an adjustment for loading at the time of computing the profit on consignment. Well friends, under such a situation, when the goods is sent by the consignor to the consignee at a price higher than the cost price, in such a case the adjustment of loading is concerned as far as the goods sent on consignment on invoice price is concerned. So, calculation of cost price and invoice price. Well, dear learners, you know that the relationship between the invoice price and the cost price and the profit, the same can be expressed in the form of an equation which is IP. It stands for invoice price. IP is equal to cost price, that is CP, cost price plus profit. So, if we add profit into the cost price is called invoice price. With the help of this equation, we can find out the missing figure. If any two figures are given, the third one can easily be worked out. So, let us see how the missing figure is calculated when two figures are known to us. So, third can easily be worked out. So, there are situations where the missing figure is there and we have been provided with certain amount of information. So, with the help of the informations provided, we can easily work out the calculation of the missing figure. So, let us discuss these situations one by one. The first situation is CP, that is cost price is given and profit is also given as a percentage of CP. You have to work out the invoice price. This is the first situation. The second situation is cost price is given and profit is given as a percentage of invoice price. You have to work out IP, that is invoice price. Third one is invoice price is given and the profit is given as a percentage of invoice price. We have to calculate the cost price. Then the invoice price is given and profit is given as a percentage of cost price. You have to calculate the cost price. So, now we will discuss all these 4 situations one by one. The first situation is cost price is given and the profit is given as a percentage on CP, as a percentage on CP. Cost price is given and the profit is given as a percentage of CP. We have to work out the invoice price. So, here it is very simple. Suppose the CP of a product is, that is the cost price of a product is 200, which is invoiced at 20% profit on cost. The invoice price will be calculated as follow. So, here the equation is invoice price is equal to cost price plus profit. So, invoice price is not mentioned, we have to calculate the invoice price. So, cost price of a product is mentioned 200 plus profit is also mentioned 20% on cost. So, cost is 200. So, 20% of this 200, 20% of this 200. So, IP is 200 plus 20% of 200, that is 40. So, invoice price is 240. It is very simple. Second situation is cost price is given and the profit is given as percentage on IP. Suppose the cost price of a product is 200, which is invoiced at 20% on IP. Now, IP will be calculated as follow. Let us assume that the invoice price is X. So, the equation is this: invoice price is equal to cost price plus profit. So, we assumed invoice price is X. Cost is given, cost price is given 200 plus profit is also given 20% of IP. So, IP we have assumed X. So, 20% of X, 20% of X. So, X is equal to cost price 200 plus 20x divided by 100. So, X minus this 20x minus 100 is equal to 200. So, here 100, if we take the LCM, 100x minus 20x divided by 100 is equal to 200. So, 100x minus 20x, 80x divided by 100 to 200. So, x is equal to 250, or 80x is equal to 20,000 and x is equal to 250. Then the third one is IP is given and the profit is given as percentage of IP. Suppose the invoice price of a product is 500 and the profit is 25% on IP. The missing figure, that is the cost price, is worked out as follow. We have to calculate the cost price. So, the invoice price equation is invoice price is equal to cost price plus profit. This is the equation we know. So, IP is given 500 and profit is 25% on IP. It means 25% of 500, that is 125. This is cost price plus 20% of 500, 125. So, CP 500, CP plus 25% of 500, 125. So, CP is equal to 500 minus 125, CP is equal to cost price is equal to 375. This is the third situation. Now, the fourth situation is IP is given and the profit is given as a percentage of CP. Suppose the IP is rupees 600 and the profit is 20% of cost price, then the CP will be calculated as follow, very simple. Let us assume cost price is X. So, this is the equation, invoice price is equal to cost price plus profit. So, invoice price 600 is equal to cost price we have assumed x plus profit is 20% of CP. So, 20% of x, 20% of x, 600 is equal to, so if we take the LCM, so 100x plus 20x divided by 100, 600 is equal to, so 100x plus 20x it is 120x divided by 100. So, x is equal to 500. So, this is how we can easily work out if out of 3 things, because in the equation there are 3 things, that is invoice price, cost price plus profit. So, these are the 3 things. So, out of these 3 things, if 2 things are mentioned, we can easily calculate the third one. Now, the next one is loading. So, loading we have already discussed. Loading is invoice price minus cost price is loading, or cost price plus profit. You know that the invoice price is obtained by adding a certain amount of profit to the cost price. So, cost price plus profit is equal to invoice price. The amount of profit which is added to the cost in order to arrive at the invoice price is called loading. In other words, loading is the difference between the invoice price and the cost price. That is, loading is equal to invoice price minus cost price. So, items which involves loading. So, let us now discuss what are those items where the amount of loading is involved. So, it is very simple, dear learners, as we have discussed this fact many times, that loading is involved only in the items where the goods is involved. So, any item where goods is involved, loading will also be involved. So, item is opening stock of goods, goods sent on consignment, goods returned by the consignee, and the closing stock. So, all these 4 items pertains to the items where goods is involved. Therefore, the loading will also takes place in all the 4 items. Let us now take the items involving loading one by one and see how the necessary adjustments are made. So, first one is opening stock. So, opening stock is always shown on the debit side of consignment account. In case stock is shown at invoice price, the difference between invoice price and cost price, that is loading of opening stock, will be shown in the credit side of the consignment account. So, one of my suggestion to the learners is that loading will always be reflected on the opposite side. See, for example, the consignment, in the consignment account, opening stock is reflected in the debit side. So, therefore, any loading included in the opening stock will be shown in the credit side of consignment account. Likewise, the closing stock is always shown on the credit side of the consignment account. So, any loading involved in the closing stocks will be reflected in the debit side of the consignment account. So, here goods sent on consignment is shown always in the debit side. Therefore, any amount of loading involved in the goods sent on consignment will be reflected in the credit side. Goods returned by the consignee is always shown on the credit side. Therefore, any amount of loading involved in the goods returned will be shown in the opposite side of the consignment, that is debit side. So, here the journal entry for amount of loading involved in the opening stock would be stock reserve account debit to consignment. It means buy stock reserve in the consignment account. Then the goods sent on consignment. So, the journal entry would be goods sent on consignment account debit to consignment. Then the third one is goods returned by the consignee. So, इसका बिल्कुल एकदम the reverse of this, consignment account debit to goods sent on consignment. then the closing stock. So, the entry would be reverse to the first journal entry, and it was for opening stock. If stock reserve is debited, then for closing stock, stock reserve would be credited, and for opening stock consignment account is credited. Therefore, for the closing stock consignment account will be debited. Let us check. For closing stock, the entry is consignment account debit to stock reserve. So, keeping in view the following, we have calculated, we have discussed how the stock is to be recorded in the consignment account. So, when we prepare the consignment account, we have to be very particular that any amount of loading involved in the opening stock or in the closing stock or in the goods sent on consignment or in the goods returned by the consignee. So, we have to be very particular, and we can discuss all these things with the help of the example also, because when we need to calculate the amount of closing stock, amount of opening stock, amount of goods returned by the consignee and the amount of goods sent to consignment. So, here dear learners, you all are quite familiar that generally amount of goods sent on consignment is given in the question. So, that amount of goods sent on consignment, we need to be very particular whether the amount sent on goods sent on consignment is valued either in the cost price or at invoice price. The goods sent on consignment, when the goods is dispatched by the consignor to the consignee on invoice price. So, once the invoice price comes into picture, it means that the amount of loading is also involved in the goods sent on consignment. So, any item where the goods is dispatched on invoice price, it means loading will definitely takes place. So, we have to treat the amount of loading accordingly in all the 4 items, because if we will not give our due attention to the amount of loading which is involved in the 4 items, and those 4 items are opening stock, then the second one is goods sent on consignment, then the third one is goods returned by the consignee, and the fourth one is closing stock. Then if we do not give our proper attention, then the valuation of the closing stock and the entire process of preparing the consignment account, the consignee account, the goods sent on consignee, consignment account, the entire process will be wrong, and the students will not be able to find out the exact amount of profit or loss earned by the consignment account, because when we prepare the consignment account and the goods is dispatched by the consignor to the consignee on invoice price, the main objective of sending the goods, dispatching the goods by the consignor to the consignee on invoice price is that the consignor never wants that the consignee should come to know about the amount of profit or loss earned by the consignor. Therefore, the consignor always conceals the actual cost of the goods dispatched by him to the consignor. So, when the goods is dispatched by the consignor to the consignee over and above the actual cost, so this over and above the actual cost is known as loading. Therefore, the adjustment of this loading is essential, and if we do not make any adjustment of this amount of loading, then it will be very difficult for the consignor to come to know about the actual amount of profit or loss earned by him in that particular activity, in that particular assignment. So, the treatment, the procedure of taking into account the amount of loading is as simple as that, because we have discussed 4 items so far. The first item is opening stock. So, if opening stock, we all know that it is recorded in the debit side of the consignment account. So, when opening stock is given and the opening stock is representing the amount of goods on invoice price, then definitely the amount of loading which is involved in the opening stock will have to be adjusted, and the treatment, accounting treatment in the books of the account has become mandatory, and accordingly, in order to reflect the amount of loss or profit in the consignment account, the adjustment of this loading amount in the credit side of the consignment account become necessary. So, any amount of loading which is included in the amount of opening stock has to be adjusted in the opposite direction, that is in the credit side of profit and credit side of consignment account. So, the second item is goods sent on consignment account. So, when we talk about goods sent on consignment, so when the goods is dispatched by the consignor to the consignee on invoice price, so the amount of loading is also included in the goods dispatched by the consignor to the consignee. Now, we have to check that how much amount of loading is involved in the actual cost of the goods dispatched by the consignor to the consignee. So, here the procedure, the formula is very simple. If it is mentioned in the question that the goods is dispatched by the consignor to the consignee on 20% of cost, and if the cost of the goods dispatched by the consignor to the consignee is, say for example, 40,000 rupees, and the goods is dispatched by the consignor to the consignee over and above the actual cost, that is 20% of actual cost. So, actual cost is 40,000 and the 20% of actual cost 40,000 is 8,000. It means the goods has been dispatched by the consignor to the consignee of rupees 48,000. So, out of this 48,000, 40,000 is the actual cost of the goods consigned by the consignor to the consignee, and in this rupees 8,000 have been included for loading charges. It means total it is dispatched by the consignor to the consignee is 48,000. So, out of this 48,000, 40,000 is the cost of goods and 8,000 is the amount of loading. So, this amount of rupees 8,000 which is loading one has to be recorded in the opposite side of the consignment account, that is in the credit side of the consignment account. Then the third one is goods returned by the consignee. So, here goods returned by the consignee, say for example of rupees 5,000, the consignee has returned the goods to the consignor of 5,000 rupees. So, here it is pertinent to mention that the goods had been dispatched by the consignor to the consignee on invoice price. So, this 5,000 is representing the invoice price. So, here goods returned by the consignee will be recorded in the credit side of the consignment account. 5,000 rupees. So, this 5,000 is representing the invoice price. It means this is representing 120%, because the invoice price, it is mentioned in the question that the goods is dispatched by the consignor to the consignee over and above 20% over and above the actual cost. So, it means this 5,000 is representing the invoice price. So, if it is representing 120%, then what it will represent 20%. So, in this the amount which is above the cost price, so will be returned in the debit side of the consignment account, that is the opposite side of the consignment account. So, when goods is written in the credit side of the consignment account, then its opposite side is the debit side. So, any amount of loading which is included in the goods returned will be recorded in the debit side of the consignment account. Then the fourth one is closing stock or unsold stock. So, unsold stock is always written in the credit side of the consignment account. So, it is also quite obvious that the amount of stock which remain unsold at the end of the year is also representing the invoice price, because the goods was dispatched by the consignor to the consignee on invoice price. Say for example, if goods worth rupees 4,000 remain unsold. So, this 4,000 is representing the invoice price. So, definitely in this 4,000 some amount of loading is also involved, and the amount of loading involved is 20%. So, any amount over and above the actual cost will be written on the opposite side of the consignment account. So, here if any amount which is included as loading in the closing stock will be written in the debit side of the consignment account, and this is how the adjustment of loading is done. And after taking due consideration of the loading amount, only then the actual amount of profit and loss will be calculated on a particular consignment. So, this was all about the invoice price and the procedure of calculating the fair or procedure of calculating the actual amount of profit or loss in case where the goods is dispatched by the consignor to the consignee on the invoice price. So, this was all. So, my suggestion, my advice to the learners is that whenever the goods is dispatched by the consignor to the consignee on invoice price, then first of all they should identify the items where the loading can take place. So, I have already discussed that there are 4 items where the loading generally takes place. The first one is opening stock, second one is goods sent on consignment, then the third one is closing stock, and the fourth one is goods are returned by the consignee. So, all these 4 items need proper attention, and after making the adjustment of the loading, only then the consignment account is prepared, and then the consignment account will show the actual amount of profit or loss earned on that particular assignment. So, this session exclusively dedicated to the situation where the goods is sold by the goods is dispatched by the consignor to the consignee on invoice price, the price which is over and above the actual price. Thank you very much.